Welcome to Crypto 101. We have a great group of 2008 RSVPs for this event, alumni, students, industry leaders, and more. To our Cornellians tuning in, none of this will be on your prelim exam, so you can just enjoy. This event, I'm Megan Cross, I'm a partner at Amplify Her Ventures, also a Cornell alum. This event is part of a series hosted by Cornell's Female Founders and Funders Institute. You can read more about that in the materials that are being shared in the chat momentarily. 3 quick housekeeping notes before we dive in. Whether you're in Ithaca, your office, New York, or like most people these days in Miami or the Metaverse, you can all enter questions into the chat function, and we will get to those at about 1:40, 1:45. Second point, this session will be recorded. And finally, and this is important, none of what we are all saying here is meant to solicit or be an investment recommendation of any kind. Now, I am thrilled to share this time with 5 exceptional leaders in blockchain technology and crypto. We have Nisa Moyles, managing partner of A100X, focused on blockchain investing. She started as a securities and corporate lawyer and is an advisor to Dragonfly Capital, one of the largest global crypto funds. We have Krista McFarland, CEO and founder of Patientory, a currency and population health management service that regulates and secures patient data. She's also a book author, leader of digital innovation, scientist by trade and serial entrepreneur. We have Lisa Danis-Cohen, Associate General Counsel of Consumer Product at Coinbase, the cryptocurrency exchange platform. Her legal career includes fintech and financial service companies, such as Velocity Markets, Orchard, Kroll Bond Rating, and Bloomberg. We have Lynette Van here, and feel free to wave as I'm saying your name. Senior Business Development Associate at the crypto exchange platform Gemini. She is also founder of the Cornell Blockchain organization. And finally, we have Vanessa Grellet here, head of portfolio growth at CoinFund, a blockchain-focused investment firm. Previously, the executive director at Consensus and financial analyst and lawyer prior to that. So let's dive in. Thank you all for being here. Before we get into the nitty-gritty of crypto, I thought we'd start by discussing the technology behind it, blockchain. You know, when and why is it important for a company to be built on the blockchain? Krista, maybe you can start us off with this one, given Patientory, your company's usage of blockchain technology.
Absolutely. Thank you, Megan, so much for having me. I'm thrilled to be part of this wonderful group of women on this panel. So in 2016, the World Economic Forum published an agenda report that we're heading into the 4th industrial revolution. As we now are currently in the 4th industrial revolution, you know, the age of big data and Web3. Decentralization is key to unlocking the power of information, and new technology infrastructure is needed to move forward, you know, this paradigm shift, using technology such as blockchain, which is infrastructure for cryptocurrency and digital assets that we're going to be speaking about later. So you can see the implications for a shift in industries to go from centralization to adopt blockchain and blockchain-based assets such as non-fungible tokens, Nfts, which is big right now in art and entertainment. Particularly what I'm doing in healthcare, and more specifically Patientory. In healthcare, a big problem or challenge that has been around for the past 2 decades since digitization of medical and healthcare data is the ability to actually share information. As we know, HIPAA, privacy and security regulations such as GDPR make it really hard for even individuals like myself and you to even access our own information. So the ability to use blockchain to break down these data silos, we can also empower and give ownership of healthcare information back to individuals. When starting Patientory, our company's thesis was really looking at the rise in chronic disease epidemic in the US adult population. Fast forward today, we're now in a pandemic, and it's never been even more important or comprehensible that The true drivers of positive healthcare outcomes are individuals, and that particularly means equipping ourselves with the information and the necessary tools to make informed decisions about our health. And that starts with the ability to access our information and data.
So basically, you're saying that the power of being decentralized versus centralized gives the patients that autonomy and access to their own day-to-day health and wellness.
Exactly.
And when you think of the value of this technology, Nisa, you were an early bettor on this space, not just crypto, but the blockchain technology itself. You even created an entire investment fund around it. Can you share a bit about what drove you to double down on blockchain technology in the first place?
Well, as you know, when we were sitting together at Scout's office in 2016, I was already looking at this, investing in it. And I had also seen that there were systemic barriers in traditional venture capital that I thought could be kind of circumvented using this technology or access to wealth creation and democratization of access to capital. So those were really the what drove me, just the fascination with the technology and all of its different applications. And so A100X is a manifestation of a lot of that activity. Obviously have invested in crypto, NFTs, DeFi, Metaverse, gaming, et cetera. But there are a lot of areas that are overlooked, that are use cases of blockchain technology. And Krista just did a very good job explaining that healthcare is one of them. And that's part of our thesis. There are also, climate or carbon offset markets. There's supply chain issues that are very readily apparent right now. There's legal, title, identity, tokenization of real world assets, et cetera, that are not crypto and don't take on that regulatory risk or volatility that crypto has. So created A100X as a hedge against that for a broader access to all of these different verticals.
Yeah, and it seems to be working. I mean, just this week, I'll give you a plug. I saw that one of your early investments, Polygon, is now valued at $13 billion. I mean, when you think of the growth of companies like this, what does that say to you about where the opportunity is at this point?
So I think there have been phases and hype cycles, and we've gone through that with NFTs in 2021, et cetera, and gaming and Metaverse now. I think that there are still great opportunities there. A lot of those companies are overvalued and competitive to get into, and so I'd like to say that there are other opportunities that are undervalued, and that's where the arbitrage opportunity exists. And so all of those areas that I mentioned, I believe, are the next big thing.
And let's dive a little bit deeper now into, as individuals, investing into crypto as its own asset class. On getting started in the first place, I mean, Lynette, you would be a great person to address this, given that you started the blockchain network at Cornell while you were a student, before going on to start your career at Gemini. How did you first get interested in this space? What tools, channels did you use to really get informed?
Yeah, thank you. So basically, I would say that I got introduced in 2016. I was living in Flora Rose as a sophomore, and the guy down the hall on my floor, he was talking about how he plugged a machine in and was like making money. He was mining Bitcoin. And I was like, what? How is that possible? That's insane. This is crazy. And we both kind of wanted to learn more about the technology behind it. Like what did it mean to plug a machine in and mine Bitcoin, for example? And given us that we were both hoteliers at the time, we didn't really have a technical background, and there wasn't a lot of educational tools, I think, out there during that time. And so a lot of maybe more boring books, things that had very deep technical analysis, but things that I wouldn't understand as a hotelier. And so we kind of realized that Cornell had a huge component in crypto and had many leaders in the space. Given with IC3, we have Professor Sear, we have Kathleen Brightman with Tezos, and we kind of realized we're sitting on a gold mine here. There wasn't an organization on campus for the undergrad students to get together, and I think that's kind of where Cornell Blockchain was born, was to kind of allow students, like me or like anybody who's curious to learn, to be able to get into a group of like-minded people and just discuss and kind of ask questions and feed off of each other's ideas and talk about the space. I think that's the best way how I learn, is just asking a lot of questions and kind of having people to be able to like converse with. I would say the tools I would use now, there's so many educational tools that are now spun up now that the industry has grown a little bit. But I would definitely say Twitter is still my holy grail on keeping things updated and kind of figuring out where to start on topics, and then kind of digging through into maybe more particular articles and things like that as well.
Cool. Twitter, good place to start. For Discord, in terms of actually getting invested, right? So that's getting access to the information, dipping your toe in making those investments as individual investors. We're lucky to have folks here from Gemini and Coinbase. Lindsay, can you tell a little bit about some of the exciting work you have going on now to make it so that investing and getting access to this asset class, even as a newcomer, is made possible through these distributed finance platforms?
Sure. So I think, to Lynette's point, a great way for users to experience either the DeFi ecosystem or even just getting comfortable with crypto generally is doing. And that's really unlike kind of traditional financial services where there's not a lot to do. Most people's first foray into crypto is through some sort of centralized platform like a Gemini, a Coinbase, something where you are relying a little more traditionally on others to store your keys and kind of provide the walls and comfort that you might expect from traditional financial services. But since we're talking about DeFi and kind of more maybe the next step into Web3, in modern financial services, while we've traditionally relied on centralized intermediaries, and again, there are those great centralized resources available, the notion that individuals be responsible for and hold their own assets isn't new, right? These DeFi protocols, though, kind of allow you to deploy your assets and through self-hosted wallets, which are just, more technologically enabled and more lucrative than storing your money in your mattress, but kind of similar in ethos in many ways, right? So, the thesis behind crypto is that the value is putting control into the hands of the individual user. So many users ask me, or folks ask me, how do you move from kind of a centralized platform to dipping your toe into DeFi? You're excited about this notion of empowerment, and there's really two key features of DeFi empowerment. So one is just the access and getting comfortable with controlling your own finances. I analogize it to driving a car for the first time. You say, oh my gosh, I can move myself from this place to that place and I'm not relying on the subway or my parents, right? There is this great freedom and feeling that comes from it. So it also, of course, provides new ways to earn. There's tons of yield opportunities out there, and it provides a lot of data protection benefits, which I think we'll get into a little bit later. And the second, feature of kind of empowerment of participating in DeFi is joining a group that has a communal purpose. And I know it's a little Pollyanna-ish, but it does really feel exciting when you're dealing with a group of other people that, you're not just in it to make money. There's a real kind of outcome and goal at the end of it. So when you're talking about how to make that jump, I think the first thing is really get comfortable with a self-hosted wallet. download a MetaMask or a Coinbase wallet, something like that, play around with it, work on connecting it to kind of the bigger protocols and just play around, right? I think Lynette really nailed it when she said that's how she learned and that's how she felt comfortable and how she is where she is now.
Great. I'll build on that car analogy for a sec. So, after cars were on the road for a little while, then all of a sudden we started to wear seatbelts. So I'd love to talk a little bit about the security behind crypto. What are some of those sort of common pitfalls, things to avoid in order to ensure that when we're dipping our toe into crypto, and sorry to rhyme, we're being as safe as possible? Vanessa, maybe you can share a little bit about this, given your background in the space.
Sure. So what's really important, it really depends how you want to interact with crypto. As we've said, you could go through a more centralized interface and marketplaces, whether it's for the NFTs or for trading, and in which case, the risk of you getting hacked are a little bit less, but you do have to be really careful with your passwords and your authentication, etc. When you're just trading off wallets, there needs to be specific care about how you manage your private keys. And I can't stress enough how important it is. And I'm sure, at least I have, a lot of people have lost in this group, maybe at the beginning, either their private keys or the device, and access to the information in order to retrieve the information. Don't have anything, a photo of anything on a digital, in a digital way. There are different, types of wallets where you can safekeep your digital assets, but always be on the lookout and a little bit paranoid about, solicitations, about giving out information, something, that seems non-coincidental will have an impact. On a personal base, I have not been hacked with my private key, but some people were trying to have access to my information. My telephone SIM card got ported. So, make sure that you have the option, the do not port option and things like that.
Can you just emphasize that? Sorry for the folks in the back, aka myself, the do not port option.
Yes, so it means that no one can basically swipe your SIM card or exchange your SIM card and have full access to your telephone access and and then consequently, like your social media or your email, etc. So I'll give you an example of how I was hacked. I received a call, and it was a strange call, but I didn't pay attention. And then I was abroad, and all my social media accounts were, hacked, and someone had took them over. And I was lucky because I didn't have any impact on my crypto holdings or my accounts. So it's really important that you have two-factor authentication and all the security parameters that are suggested for you when you trade or when you have access to Coinbase or Gemini or others. The more security, the better. And, think about how you disseminate the information and especially who you share it with. Don't share it, but find a way so that you can have access securely to it.
And I'll take a quick glossary pause. So a few things that we said recently, DeFi, distributed finance, abbreviation for that. Some folks talked about having a wallet. So can actually pose to the group, can you share a little bit about what you mean by a wallet versus simply reading through a centralized platform like a Coinbase or Gemini.
Maybe the Gemini could answer that in more detail.
Yeah, go for it.
Yeah, so a wallet basically kind of reads exactly what assets you have stored on the blockchain. So it's telling you, you have 50 Bitcoin via like a Bitcoin Explorer, for example. And so when you're trading on Gemini, we don't have necessarily a wallet that will allow you to connect to maybe a DeFi platform like MetaMask, but we have our wallets that hold your Bitcoin assets for you when you're buying and trading. And then if you want to go into DeFi, you could use MetaMask, for example, and send over your assets from our Gemini wallet to your own MetaMask wallet, and that will kind of allow you to utilize your assets there. So we don't own your assets at all, but we just help store it for you. So that's where we're able to, keep track of your private keys and things like that. Where when you're on MetaMask, you have to keep track of your own private key. So
yeah, Lynette, I feel like this is a good opportunity to kind of talk about, what a private key means, or what that entails when a user gets into DeFi or self-hosted wallets, right? When you're using a Coinbase or Gemini, I think the main value prop, other than some of the cool features we have and the ease of use, right, is that you have us to rely on it very much in the way that you would rely on, a bank, right, to store certain information, provide certain services. If you get stuck, if you lose your password, right? Really, Coinbase and Gemini hold the custodial keys to these omnibus wallets where we store, all of our users' assets, right? And there's cold storage and hot wallets. I don't know that we need to get into that level of detail, but when, and so the main jump is really to the DeFi space is getting comfortable with this self-hosted wallet. What that means when you're holding your own key, there is a very long string of letters and numbers that are provided to you, and that is your key password. You're required to keep that. There's then a 10-word, right? There's a list of 10 words you're required to keep and hold on to so that you can access your accounts later. I know that it makes people anxious or nervous, like the thought of having that control. But I think really overcoming it, again, like, Megan, I think we can go back to the car analogy. It's like getting behind the wheel for the first time. It's scary, overwhelming. But once kind of you get comfortable, and I think, Vanessa, maybe you have some tips on how to keep your passwords or how to keep things safe. But I think a lot of it is a mental block. Right, we've relied very heavily on third parties, and really getting there and getting comfortable with holding that power is really important.
Mm-hmm. That's a really good point.
The only advice I would have is don't share your number, don't share any information about what you're doing. Everything is publicly available on the blockchain, but you don't want your address to be associated with you as an individual, right? So, I think in the Web 2 world, we're very comfortable oversharing because it doesn't have any impact. Whereas here, when there's a hack, there's real impact.
I want to also add that, having hardware, two-factor authentication is great as well. But, having hardware, for example, like a ledger or a YubiKey, for example, would be even more secure because it needs to be physically attached to your device to additionally log in, for example. So that's something else I would also add.
Yeah, I would also add as an advice, it's really important to also store like your hardware and private keys in a safe place. I remember early on when the crypto space just, started to increase, a couple of us decided to store our hardware and private keys in safety deposit box, something that's been around for so long. But it makes sense because you never know, accidents happen, fires happen, theft happens. So that's also something to think about.
So basically the main takeaway is for those of us who still keep all of our passwords on a Post-it note under our keyboard to just have really good adhesive. No, that's not the takeaway. Okay. I guess in addition to that, so how do you think about the behavior of this investing as an individual? You know, we hear about dips, we hear about volatility. What are some of the tips you have for individual investors in this behavior of getting started? What should we be looking for? Nisa, why don't you kick us off? Because I feel
Sure. So I think that dips of like up to 50% are really common in crypto. Mm-hmm. And really, you shouldn't be investing anything that you wouldn't hold. You shouldn't hold for 10 days what you're not going to hold for 10 years, right? So you really need to have a longer time horizon and be able to handle that volatility. And so, buy the dip is very common, and an interesting, trading strategy. There's hedging strategies, there's derivatives, there's options, etc. But for the, just the beginners, we say hodl, right? Hold on for dear life.
Mm-hmm. Great advice. And those benchmarks are good to keep in mind too. Okay, so I feel like we've covered a lot of ground with individual investing. Now, let's move on to talk a little bit about the more macro impact of blockchain and crypto in general. Lynette, you were talking about mining early on, and we have read in recent news, and it's a hot button issue on the environmental impact of this industry. I personally should disclose that my fund is exposed to proof of stake, and I will be biased when I share my thoughts there. But before I do, I'd love to hear the group's thoughts on this conversation as it relates to environmental impact. It's said to, some folks would say that mining 1 Bitcoin is equivalent to a US household's electricity usage in a year. It's very nuanced. How do you look at the impact in this space, and where is there an opportunity?
So I think what's interesting is we see a lot of headlines around the how much carbon intensive is Bitcoin or others. I think the opportunity that we have is, one, to use clean energy to power the compute that is necessary, and also to I think we need to take a step back and compare apples to apples. I don't think we are surfacing the carbon footprint of other large institutions or technologies like AI, et cetera, and comparing it to the footprint of cryptocurrencies. So I think once you have that compare from apples to apples, then we can make a determination of like, how does tech in general need to leverage renewable energies in order to power its activity. So Bitcoin and other cryptocurrencies are not going anywhere. So, regulating or trying to regulate smaller chunks of the activity or specific actors is not going to provide a global solution. I think we need to all come together to ensure that these types of carbon footprints are minimized or offset. And there's tons of ways to do that.
I think that's a really good point, comparing apples to apples. I mean, when we think about apples to apples across geographies alone, there's different nuances to consider, right? I mean, just because it's affordable in New York based off of fossil fuel prices, that begs the question, should fossil fuel prices really be as low as they are to begin with? Why not look to Texas where there's an excess to take advantage of that solar power? What would you all say in terms of how Web3 companies are starting to think about how to offset their carbon emissions? Are you seeing any companies that actually help other businesses offset CO2 emissions in this space?
Yes, we have invested in those types of companies. a company called Blockchain Triangle, for instance, using IoT sensors to make renewable energy more accessible and tradable for other companies as well. And there are plenty of use cases of blockchain that are targeting carbon offset. And so this crypto mining kind of, Elizabeth Warren, fear is a little bit political. And so you can't really, like Vanessa said, read all the headlines for face value. Mm-hmm. So I think that the more the narrative gets in front of Congress, like it did today, mm-hmm. At the hearing about, just how beneficial these are and how they use less energy compared to other things, I think the better that we get that narrative across. It doesn't get clicks in the media, but mm-hmm. Still the reality is the reality.
Absolutely. And I guess to even educate more behind the scenes. So Chris, and maybe this is one for you, given your work in blockchain application technology, like why does Bitcoin get the bad rep versus as a proof of stake concept versus the proof of work as opposed to the proof of stake Ethereums of the world?
Yeah, just looking at it from a healthcare standpoint, which is, I think, the most conservative industry today, it just takes them at least 10 years to adopt new technology and what has already surfaced, around Bitcoin. Mm-hmm. In industries like healthcare, there has to be some sort of governance and still centralization or regulation. So that pure, peer-to-peer, especially when you think of something as sensitive as health information, which is, worth 3 times as much as, credit card data, it becomes more of how much, do they actually, or do we want to give up in terms of that ownership and lack of centralization. Mm-hmm. So with, platforms, private permissioned chains and networks, that can be customizable through use of, Ethereum and other, proof of service platforms, it becomes more friendly for these types of industries to adopt.
So I know we've gotten a lot of questions actually in the chat about that concept. So thank you so much for addressing all of those. I think we preemptively did. Now, before we go into Q&A, we must also address just the broader concept of the mainstreaming of Web3 and the metaverse, right? Here we are all having this great conversation through a Zoom window. But like, at what point do we show up to work as an avatar? Vanessa, I know you've made it known in your role as head of portfolio growth at CoinFund that you are quite bullish on NFTs and the metaverse. How will the metaverse affect the way we converse and collaborate?
So I want to take a step back and explain why people are excited about mm-hmm. metaverse and NFTs, because we've already had the metaverse around for a long time. And, the development of AR and VR and sort of online experience has been something that's been in the works for a long time. But with the NFT technology and the possibility to claim ownership over a digital good, that really changes the game, changes mm-hmm. the game for the gaming industry, for the fashion industry, for all the experiences in the metaverse where you can attest of, a ticket, a good, a skin in a game. And so that's why people are seeing huge value and, crossover between what we call the metaverse and NFTs, beyond just the trading of NFTs, et cetera. So with that perspective in mind, we were very early in NFTs, and we invested in a lot of the NFT infrastructure, whether it's the marketplaces or things related to data, and just building the blocks for this NFT interaction to be possible. And also in the metaverse, as we've invested in a company called Space, which is going to be really sort of metaverse versus e-commerce. So we see a lot of ways that this could go, and probably, we're not thinking about where it's going to go. We're just like, we're really early still. And so when you think about, investing in the metaverse and where it's going to go, it's going to permeate, all aspects of our lives. Maybe you and I don't spend that much time in the metaverse, but gamers certainly do. Microsoft has a huge, footprint in developing experiences for day-to-day work and other interactions, whether it be concerts or just discussions or shopping, etc. So we're very early in terms of the infrastructure in the metaverse itself, whether it's AR, VR, and the experience there, which can be sometimes painful. And then we're early in the NFT infrastructure to power that.
Yeah, it's interesting. It's almost like these days, conversation around the metaverse makes it into its own vertical, but in reality, it's a function, it's a technology. It's like what AI and machine learning were 7 years ago. It can be applied.
I think adding on to that, as layer ones become more interoperable and being able to transfer assets cross-chain much easier. I think that kind of applies with like NFTs and the metaverse and gaming, being able to bring certain skins or items from one game to another. And I think that opens up a whole new, marketplace and allowance that we previously don't have in Web 2 right now. So
right.
Definitely agree with Vanessa on that.
Makes a lot of sense. So in a couple minutes, we're going to go into Q&A. Before we do, can I ask a couple lightning round questions here? So, and Lynette, you really segued really well into this. So if you think of Web 1, right, it changed the way we access information. Google, for example. Web 2.0 changed the way we communicate. Let's note Facebook, right? Web 3, is it changing the way we own, changing the way we compute data? How would you finish that sentence?
Yeah, I definitely think that, the next phase is how we, own the data, is bringing it back to the people. And I think right now, you have these big tech, Google, Facebook, and they kind of control our data. And then you have us now, where these decentralized technologies, where what you're putting in, you're able to get back out as well. And I think that's what Web3 is all about, being able to contribute to the network, but also get something back in return.
Mm-hmm. Right. Anybody else want to?
I'll also add, it's changing the way we create value. Even with NFTs, we've seen just an increase in creators that, before it was really hard for an artist to be able to, sell their artwork until, they probably pass away, but now they're able to do that digitally. And it's just democratizing how, anyone can essentially exchange value.
Yeah, I'd like to say we've eliminated the term starving artist from the vocabulary, hopefully one day, but read, write, and own, I think are to echo what it was said already.
So if you were to say Google, Facebook, Google or Facebook?
I think that the goal of most people for the metaverse is to have it be decentralized so that there wouldn't emerge somebody like that would take all, which is why there was such a backlash to when Facebook rebranded to Meta, because there's a fear about Facebook and owning your data and controlling how things operate, whereas the true libertarians want it to be decentralized.
Yeah, actually, that brings up an interesting point, right? How decentralized is it really? I mean, just the other day, a couple weeks back, there was that little quarrel on Twitter between Jack Dorsey, Elon Musk, and Mark Andreessen on, is it really something for the people, or is it owned entirely by a few venture capitalists and their LPs? How can we make it so that it continues to be decentralized as it is in theory?
Yeah, I mean, I think that Web3, Megan, when you ask the question, what does Web3 mean, right? It means a change in mindset for everyone, right? It's a change in thinking about how we interact with the internet and what it's used for. So that's really where it gets to. Like currently, it's just in a position where it's so nascent. There are really big players who can kind of come in and have undue influence, but really as we move towards having conversations like this, arming individual investors with the information that they need and want, it's going to inherently move us towards that model that we're aiming for, which is living in the hands of Joe user.
Yeah, absolutely. It's us being the ones to have this conversation rather than those three dudes I mentioned earlier. Cool. All right, let's open up to some Q&A. I have a very robust lineup in my chat here. Okay, so question from Gregory Adaka. Can you tell us what you think about EIP 4488? Will it be the game changer that it's touted to be? Whoever wants to chime in. I personally have no comment. So if you think of something, feel free to shout it out. And then question from Lindsay R. How can we use crypto to leverage our international sales? I think that one is meant to be applied to, yeah, Lindsay, go for it.
Sure.
Sorry, your box lighted up. Okay, so it seems like this is meant to be as an application to a company leveraging crypto to exchange internationally. I'll leave it to anybody who wants to take that one.
Sure. I mean, I can hop in. I think what we're looking at is potentially decreasing these transaction costs and managing the increasing controls around data sharing that are right now very much confined and controlled by these are man-made borders, right? And as we move more to leveraging blockchain, to leveraging kind of crypto as a means of transacting, again, we're lowering costs and we're managing and figuring out ways to handle the sharing of data that isn't necessarily reliant on where a border is, right? So we're going to be moving companies almost up a layer, ideally at a point to be agnostic as to where they're located, where a user is located, and what kind of information is being collected or not, because it's not going to, at some point, be owned by that company, right? You business can leverage that information for your business purpose, facilitate or market your more cost-effective transaction, but then ultimately put the power in the individual who's transacting with your business to kind of take their data with them when they leave, encouraging even more transactions and more business to come to your platform.
Right. Great answer. Thanks. Next question is shifting gears a little bit. So we talk about the potential for, this one's from Nancy Liang. That's a good one. The potential for crypto to revolutionize finance for people and nations with authoritarian or failing governments. Are there notable blockchain projects that are helping the unbanked?
I mean, all the projects are going to help the unbanked at some stage. There's projects like Celo, which allows you to transfer cryptocurrencies or stable coins with your phone. So I think, the issue with like the unbanked and sort of the last mile clients is really access to connectivity and finding ways to make the user experience effective. I think if you think of projects like Axie, which could where you're able to earn money playing games and all the play to earn thing, I think that's also a way to like not bank the unbanked, but give them additional revenue, which they wouldn't have access to if they needed to create a bank account in order to have access to the wallet and the cryptocurrency.
Yeah. I think another example is El Salvador that, had Bitcoin as legal tender, or the first country to have Bitcoin as legal tender last year, even though they've been getting pushback from the IMF on just how stable that is for a nation's, financial stability and security. But that's just one, use case in how, countries and governments are looking at adopting digital currencies. We also hear of announcements of, the US looking at a digital dollar, as well as China.
I think crypto generally, like Bitcoin, right? It's a deflationary asset. So when you're asking about, how it's going to potentially revolutionize finance for people in authoritarian nations, right? There is this inherent kind of in those sort of regimes, this inherent kind of mistrust of the government. There tends to be significant inflation. Even here in the US, we're kind of dealing with a little bit of that right now. But applying, Bitcoin or using kind of a more universal denomination is really the way to help a lot of those individuals kind of overcome the man-made, inflation or mistrust that we're seeing there. And this is really one great example when people ask me kind of, why do you believe in crypto? Or like, this is one of my favorite examples of why we haven't even kind of touched and we're just at the beginning of what it can really do as a society from a societal benefit standpoint.
Absolutely. Same here, by the way. It's one of the more exciting applications. So here's a question from Michaela Kikuchi that I think will be interesting given the many lawyers we have on this call. With regard to NFTs, how do current intellectual property laws have to be amended in order to address or regulate this booming new industry? IP around NFTs. Any interesting cases that have come up recently?
Yeah, so we have, so the IP and NFT situation is going to be ongoing and figure things out. But basically there's two aspects. One is when you buy an NFT, what do you buy? And that's often a function of the fine print in the marketplace on which you buy it for. So do you have the full IP rights? If there's a physical representation of the NFT, does that have the rights? Do the artists have, authors' rights that follow on the artwork? Existing IP laws are not going away at this stage. And so you have to really be careful about, what you buy and manage your expectations in terms of like what you can do with it, reproduce it, commercialize it, monetize it, etc. Then there's the other aspect, which is IP rights and more formally sort of copyrights. So, for example, Hermes had sued a project that created these like mini Hermes bags that look fuzzy and cute, and obviously we're piggybacking the Hermes brand, but we're not Hermes, and people still bought them, right? So what is your right to create this? Is this a new, completely disconnected right that you get or not? And this will go into the courts. And then there's people who are also trying to sort of create intellectual property around processes and create patents. I'm not sure that's going to be a very successful strategy given the pace of innovation in the space, but that's another angle that we see.
Yeah, there have been a few different cases. In addition to Hermes, there was Nike, I think, also at NFT NYC, Pulp Fiction director of that movie, Quentin Tarantino, in a lawsuit now with Miramax, I think, over the rights to mint those NFTs. It's really an interesting area, because when you're getting an NFT, there's a certificate of authenticity, and a lot of people don't realize that that doesn't necessarily confer copyright or other rights to it. So I think that the lawyers in that space are going to have a busy couple of years trying to sort out precedent in that area.
Thanks for that. And okay, our next question is more of a comment from Elena, echoing the sentiment that it's awesome to see a panel of women talking about crypto. Wonderful change of pace. Rock on, Elena. Now, can you, we didn't do this one from Ryan yet. Oh, sorry, next on the list is from, this one is from Ebony Gadsden. Can you speak more about how blockchain is being used in healthcare? I'm an HR director for a psychotherapy private practice. Chris, I feel like that is a layup for you.
Yeah, no, I can definitely use that. Well, today in market, the only country that really has a healthcare blockchain-like system is Estonia. They're a population of about almost 2 million people. They have, e-health cards that already, issued by their government that, stores and records health data for their citizens. Projects in the works include, use cases such as provider credentialing that authenticates, providers and whether or not they are, up to date in the system for being able to practice medicine. There's also supply chain in pharma. There's a big coalition with pharmaceutical companies to track and trace where, drugs are, especially in considering the opioid crisis and really managing that. From our sense, we secure health data using blockchain. We're part of the largest, decentralized health network that we've organically built and connecting over 24,000 health systems in the US in order to provide that data to individuals. But there are many use cases. There's also a use case for using crypto to reward and incentivize patients, from a wellness perspective, especially when you look at chronic disease populations, which accounts for about 40% already of our population.
Thanks for sharing all of those applications too. Okay, this next one is from Ryan. Can you explain or can you highlight or explain at a higher level the process of mining? Annette, do you want to take this one?
Sure. So mining is basically how a proof of work blockchain, so Bitcoin and I guess currently Ethereum, not ETH 2.0, is how they validate transactions. And so if when you are sending, for example, from one person, from me to Ryan, a transaction, you need the way someone validates it on the network or to input it into the block, you need a miner. And the reason why it's decentralized is that these miners are being incentivized with fees. So, the fee that you pay originally, for example, for like transferring wiring from one person to another in a centralized world from a bank, you would pay the bank for that. So you're paying the miner to do that work. And the miner is just someone on the network that is providing and validating it. So that's like the very high level version of it.
Thanks. It's almost like the miner is a middleman in a way.
Yeah, exactly. Except the middleman can be you, me, and everyone here.
Great, thanks. Final question from the audience. This is an important one. Is it possible to dip into crypto investing without an abundance of disposable income? seems like a high barrier to entry from my parentheses distant perspective. Lindsay, I feel like this one's a good one for you.
Yeah, absolutely. I mean, of course, again, no investment advice here, but I absolutely think we're still, I know this is a refrain we've all repeated many times, but we're still very early days. There are so many opportunities to get into the space. A platform like Coinbase allows you to purchase fractions of, any sort of asset. So if you're looking to buy, if you have $200 to spend, you could buy $200 worth of Bitcoin. You're not required to purchase an entire Bitcoin. So there's definitely like space for everyone in this ecosystem. And there's, even if you look to the centralized platforms, you can leverage in staking, for example. You can stake with just a fraction of an asset, because the platforms will gather them together and kind of help move those assets for you through to a validator. So I think there's great ways to get exposed right now without kind of investing everything that you have. I don't advise that anyone invest everything they have when they first get into crypto. But yeah, there's definitely, I mean, I think Lynette, you can speak to this as well, but there are so many opportunities on these centralized platforms, and frankly, even getting into DeFi. It's for everyone. That's the ethos of this ecosystem. So it's not about just letting the whales in.
I think just topping off on top of what Lindsay was saying is that, the centralized platforms, I think, really help for a beginner who doesn't really understand or is a little bit nervous about holding their private keys and those kinds of factors, and just want, the traditional username, password. But, there's a lot of also not just Bitcoin, Ethereum, which is, 3K, 40K, right? We have, a lot of other technologies with smaller amounts that you can also get into. And on top of that, the DeFi protocols that I think centralized exchanges give you the first step in, and then you can partake in a lending protocol and lend your assets and yield some interest there. I think there's a lot of opportunities to slowly watch you accumulate and grow with just $100, $200, and then kind of, as you're growing, grow more there in the industry. You don't have to, just stick 40K to start today. So.
And like with any investment practice, don't invest more than you're comfortable losing entirely. But again, to repeat from the beginning of this call, none of us here are providing investment recommendations, advice, soliciting in any way. All of these views are our own and not reflective of our company. Just wanted to wrap up by reminding everybody that. We have 1 minute left, lightning round for real this time. People started investing in stocks and bonds 400 years ago. They started investing in crypto a dozen years ago. What are we expecting of this space 10 years from now? In one sentence or less.
Everyone will have crypto in their portfolio as part of, normal investments and portfolio management.
Nisa?
I think it's 10 years is too long of a time horizon to predict what's going to happen in crypto. It just moves so fast.
Krissa?
Yeah, I know I would, agree with the sentiment stated. It's a fast moving space and industry, but hopefully by then we'll see banks start to offer it, as investments, in terms of like traditional portfolio offerings.
Lindsay?
Yeah, I hope that in 10 years, there's an understanding that those of us in the crypto space want to do right and are professionals and intelligent and, are looking to work within the bounds of the law and kind of what's allowed. So hopefully in 10 years, we see, widespread acceptance and less skepticism.
Right. And Lynette?
Yeah, I think also, given that we're still a very young market and industry, the more toolings and more education available, hopefully seeing the assets being maybe a little bit less volatile and more stable, and allowing, you know, everyone to take part of it and being a part of, like, for example, the metaverse, maybe, you know, see you guys there.
We see you in the metaverse. All right. Nisa, Vanessa, Krista, Lindsay, Lynette, thank you so much. Thank you to the many folks who are tuning in. And yeah, to quote Lynette, see you in the metaverse. Thanks, everyone.
Thank you.
Thanks.
Thank you.